You never need to go and buy one of these bullshit courses that people literally package free information and make you pay hundreds of dollars, even thousands in some cases. So what we're gonna do today is we're gonna go through a full course on exactly how you, as a beginner trader, can come into this industry where most people fail and actually get an edge so that you become the few who actually succeed. So, with no further ado, sit back, relax. Wait a minute, don't sit back and relax, because you gotta get up for your goals and get up for your dreams. So, grab a notepad and pen, and I will catch you lot in the office. Sheesh. Now, before we get into anything trading related, we have to go through something very important. And in my opinion, this is the most important thing, because if you do not master this one thing here, it doesn't matter how much knowledge you have or how much experience you have, you're never gonna make it. And that is having the right expectations. You see, a lot of people, they see the lifestyle we live, they see the cars, they see the properties, they see the lifestyle and the travel, but they don't actually understand what it actually takes. You have to have the right expectations that this is a profession. Just like if you want to become a doctor, if you want to become a lawyer, you have to go through years of study, years of training to finally make it work. Now, will it actually take you 5, 10 years to become a full-time trader? Well, it took me 3 years. And the reason it took me 3 years is because for 2 of those years, well, I didn't have a mentor. I didn't have the right guidance, right? I was lost, I'll be honest with you, because it's not like there's a school or a university you can go to and, you know what I mean, learn this stuff. So when it comes to the right expectations, please don't think this is a get-rich-quick scheme. Please don't think you'll be driving Lamborghinis in a week. Now we've got that out of the way, let's get into the real meat of things. So first things first, there's different types of markets you can trade. However, the actual market itself doesn't really matter, because what you're doing is doing something called technical analysis, where you're looking at the chart and learning how to interpret the language of the financial markets. But before you get into that, and we'll look at the charts in a moment, you need to firstly decide what type of trader you want to be. Now, a lot of people think trading requires thousands of hours a day and you have to be on front of the screen all day. Well, that's not the reality of it. There's different types of traders. You can firstly be a position trader. This is like the traditional stock investing where you maybe buy something and hold it for a few years. You've then got swing trading, the second type of trading. And this is where you're holding trades maybe for a few days or a few weeks and you're swinging it over a few days. You've then got day trading where you're getting in maybe in the morning and getting out in the evening. And then finally, you've got scalping where you're taking lots of little opportunities throughout the day. Now, is there a right way or a wrong way to do it? That is entirely down to personal preference. If you're someone who's very busy, I'd recommend swing trading because you're not going to be there to catch all the little micro moves. But if you're someone who's very impatient, now you could scalp and take lots of little trades throughout the day. However, the type of trading, I would recommend trying them all out. For me, I do a combination of both, literally just depending on my lifestyle and my availability. If I know, for example, I'm going to be traveling or I have a few business meetings coming up, I don't have the time to focus and trade, I'll be on the higher time frames and doing swing trading or maybe even position trading. However, if my schedule frees up, now I'll get into more day trading and more scalping and catching the smaller moves. Each style is going to have its own pros and cons. Again, scalping and day trading can be a little bit more time consuming and can be a lot more stressful because you're making lots of decisions in short amounts of time. However, swing trading can be a lot more calm, but it does require a lot more patience. So firstly, figure out a little bit about yourself. And if you're someone who's impatient, yeah, you're probably going to want to day trade or scalp. And if you're someone who's got a bit more patience and a lot more busy, then I would recommend probably swing trading or getting into position trading. Now, one of the most important things is the right education, because you need to understand how the market actually works. The problem is there's way too much information available these days. And what people are doing is they're going to this guy and learning a little bit, going to that guy and learning a little bit. And then what happens when they come to trade, they've got a mishmash of information in their head and it just goes into because they've got so much stuff going on. What I did is I just found one person who had the exact results I desired and I literally copied them. There's no other way about it. When I say copy them, I mean I copied their exact strategy and learn exactly how they view the markets. However, when it comes to it, right, there is 4 key areas you need to focus on. The first one is called technical analysis. The second is called fundamental analysis. The third is called psychology. And the fourth is called journaling and refinement. Now, we will get into them in a moment, but you need to know the correct softwares and the correct pieces of application and websites and different resources that you need to actually use to go in and actually start trading. So firstly, you need to get a broker. A broker is essentially a middleman that connects you to the market and allows you to actually place trades on leverage. When you sign up to a broker, you get to choose a different amount of leverage, maybe 1 to 500, 1 to 20, 1 to 30, 1 to 100. There's lots of different amounts. All that basically means is When you're trading, you can now make more money than the money you actually have in your account. However, you can obviously lose money. You're not getting a loan, but what you're doing is making an agreement with this broker, this middleman, and allowing you to get more buying power with the money you actually have. Because a lot of these moves in these markets, unless it's cryptocurrency, if you're not using leverage and you're buying, for example, $100 of pounds and then trying to trade that against euros, you're not going to make a lot of money. You might make maybe 1% over a week or so. So what we do is we use leverage, and every micro move these markets make, we can profit on them and maximize those. So what you firstly want to do is open a demo account with a different broker. If you want my broker, you can go down to the description and use the broker that I personally like to use. However, there's tons of them. But before you start depositing live money, open up a demo account. A demo account allows you to trade in the financial markets, but not using real money. It's like monopoly money, so you can practice. A lot of people come into this and they start depositing money in a real account, but it's like if you was trying to be a doctor and do open heart surgery, you're gonna practice on some dummies before you do it on a real person. So open up a demo account, and before you even consider putting real money in, stop and make sure you can build a portfolio. A portfolio is basically just your trades, like a record of your trades, and a track record with that portfolio, just proving that you can actually trade, in my opinion, for a minimum of 3 to 6 months of back-to-back consistent profits. Until you can get to that point, you have no business depositing any live money in a real account. Now, depending on where you are in the world, you can use different tools to access this broker and access the financial markets. So for example, myself, I'm British, so I can use an application called MetaTrader 4 or MetaTrader 5. That's my personal favorite. However, I know MetaTrader 4 is not available for certain countries now, so you can use other platforms such as CTrader. Now, this is just a platform where I would personally place trades on. What I use for analysis and looking at the graphs, because you need to be able to look at the graph to determine when you're going to enter and when you're going to exit, which we'll get into in a moment. And this platform is called TradingView. TradingView is a completely free platform that allows you to save like all of your analysis and all your markups. They do have obviously paid subscriptions if you want extra features such as alerts or more data on your charts. Personally, I have the most expensive subscription on there. I couldn't tell you what it costs, but I can give you one tip on here. When you kind of get a little bit more advanced in your journey, if you want the most expensive subscription for cheaper, what you can actually do is you can buy 1 month of it instead of the whole year and just go to cancel. And then when you go to cancel, they'll actually give you 60% off. Or just wait till Black Friday every year and you'll get 60% off every Black Friday. Now, there's one more website you need called forexfactory.com. Forexfactory.com is an economic calendar that allows you to see all of the high impact news releases for foreign exchange trading. If you're trading more stocks, you want to look at websites such as MarketWatch and pay attention to different earnings reports. If you're trading foreign exchange, what you're doing is you're trading one currency against another. So for example, you're trading the euro against the dollar. And how you actually make money in that is essentially trying to bet, is the euro going to go up against the dollar? But how do you know that? How do you know whether it's going to go up or down? So this is where you now start to learn and apply your knowledge from the 4 key skills we mentioned earlier. Now, I have done a whole video that's a little bit more advanced on this. Link will be in the description if you would like to check that out. There's 4 things you need to learn. Number 1 is technical analysis. When you open the chart and you see all the squiggly lines, technical analysis allows you to go into that and read it like a language. Now, there's lots of different strategies out there. To be honest with you, I believe every single strategy works. I believe it's down to the individual and their personal psychology, which is something you have to learn. Because you could have the best strategy in the world, but if you don't have the self-discipline to manage your greed and manage your emotions, you can make multiple mistakes and end up losing lots of money. Because imagine you take a loss and you're like, oh, I want to get that loss back. I don't want to lose that money today. You take another trade, you take a loss. Oh no, I'm down, I'm doubled down. Let me triple down and get my money back. You start risking more and all of a sudden you can lose all of your money, maybe even more. This is the importance of learning trading psychology. Now, before we dive into the psychology things, when it comes to technical analysis, all you basically need to do is learn a specific strategy. My strategy that I use is called the Wyckoff methodology, because this is the study of how bigger players and bigger institutions that trade these financial markets and control these financial markets actually start to facilitate their orders and buy and sell, basically. Now, I've done lots of different videos on Wyckoff methodology on my channel. I would definitely recommend going online and reading a lot more about Wyckoff methodology itself. However, before you trade, you need to predefine a few things. Number 1, what is your confirmation checklist? You need a checklist of boxes you must tick before you place a trade. And that will include things like your entry.
Why will you enter the market? You want to have an entry model that is basically you repeating the same thing over and over and over again. Now, don't try and create this yourself, because how can you create something if you're not profitable with it? It doesn't make sense. What I did is I just found someone else's trading plan who was profitable, was backed by data, and I literally just used theirs. Simple as that. Now, how do you find that person? Well, this is the thing. You just have to firstly like the individual and make sure you can learn from them. And number two, the strategy makes sense to you. For me, that's what made sense to me, and that's why I used the strategy I used. Now, if you want my exact strategy that I used to become a full-time trader over 5 years ago, you can go to the description and apply for my mentorship program. However, you need that entry criteria, an entry model that is repeatable day in and day out. Because when you trade, you're going to lose a few trades. Yes, you're going to win a few trades too, but we don't know when we will lose and when we will win. So to generate a consistent outcome and profit from the market, we must first create a consistent approach and a consistent entry criteria that gets us actually in the markets. From there, once you know how to get in, you now need to know how to get out, an exit plan. If you're wrong, when will you get out of the market? At what point will you place your stop loss? A stop loss is basically an order that will stop your loss, because when you place a trade, your account balance will fluctuate if you go into profit and you get the direction right, or it will go into loss if you get the direction wrong. So a stop loss order protects your account with a predetermined amount of money you're willing to risk. And that's now where you need a risk management plan. So how much will you risk per trade? For me, I risk anywhere between 0.06% to around 0.25% per trade, depending on different criteria. And then you need to have an exit plan on when you'll get out when you're right. How much of the trade will you close, and where will you get out, and how long will you be in that trade for? So number two, the second skill set is now fundamental analysis. This is where you look at the website I mentioned earlier called Forex Factory and start to look at the economic calendar. Because when you see these red folder news come out, the market will be very volatile and have big moves. During these big moves, yes, when you get more advanced, you can learn to predict them. However, for now, I would recommend just completely staying away when those news events actually happen. So if you see a news event at 1 p.m., for example, I would recommend staying out of the market 30 minutes before and 30 minutes after, because you can actually lose a lot of money during those events. The third skill set you need to learn is psychology, which we mentioned a little bit earlier, which is learning how to control and deal with your emotions. Because a lot of the time when we're trading, we're dealing with money, it can become very emotional when you lose sums of money or even win sums of money. If you win a large amount of money, you can get very overconfident. Now you can overtrade and actually give all that money back. Vice versa, you might lose a bunch of money and now get a little bit sad and want to win all that money back and end up losing all of your money. So we need to learn how to master our emotions and stay in control of ourselves and not make stupid decisions. That's where obviously having our trading plan comes in. And then the fourth skill set is journaling and refinement. Now, in my opinion, this is one of the most important things, because a lot of people will learn a strategy and they'll maybe use it for a week or a month and they'll lose a few trades and say, this strategy doesn't work. But here's the thing, every strategy can work. It's just, are you willing to stick to that one strategy long enough and learn your habits? For example, for me, I used to find that I would lose a lot on Mondays throughout the week. I don't know exactly why, but my data told me, because I would look at it and I would journal and I would reflect on my actions. And if I kept seeing that, oh, wait a minute, I keep losing on Mondays, I'm going to stop trading on Mondays and follow my data. And that allowed me to make more money over time because I followed my habits and reflected. So when you learn a strategy, wherever it is, whether it's mine or someone else's, it doesn't really matter. The key is to give yourself a long enough time period and a large enough sample size of trades, and then reflect on them on a consistent basis to see what you're doing right and what you're doing wrong. Now, from there, you're ready to start trading. Like we said, go to a demo account, don't jump into a live market just yet, and build that 3 to 6 month track record. Now, once you've done that, once you've done that, you're ready to fund your live account or even get funded by other traders if you actually have a long enough track record, and start making some money. Now, before we finish off, here are some bonus tips to make sure you actually succeed. Number one, don't be afraid to put in the work. This is a profession just like any other industry, and it takes time to master. Number two, keep a trading journal. Consistently take trades and review those trades and see what you're doing right, what you're doing wrong. Number three, make sure you predefine your risk before every trade. Calculate your risk using a lot size calculator, which I've done videos on my channel, and make sure you know exactly how much money you're willing to lose on that trade before you place the trade. Never lose more than 1% per trade. Keep your losses small and make sure your winners are at least 2 to 3 to 4 to 5 times your losses. You can get higher than that, such as a strategy I use, where I look at to make 10 times my return on investment. However, that's a little bit more advanced. If you do want to check that out, again, I've got lots of videos on my YouTube channel about it. The final tip is just don't give up. Like, I know it sounds very cliche, but a lot of people, they come in with high hopes and that they're going to be rich overnight, and that was me. Right? I came in, I remember I doubled my trading account literally in 10 minutes, and I thought, oh my God, I'm going to be rich. I was so excited. And about an hour later, I lost everything. Of course, I wanted to give up. My friends and family were telling me to give up. They told me it's a scam. They told me it's never going to work. They even told me that I would never make it work. I was never the smartest kid. My teachers literally pulled me aside 2 weeks before my A-level exams and said, Kieran, I don't think you should take these exams. I said, why? She said, because you're going to fail them all. It's just not worth it. I took them. I failed them. But that's besides the point. The point is, people are going to doubt you, but you have to have unwavering confidence and unwavering self-belief and do this until you actually succeed. Now, in my opinion, the best way to actually succeed, and this was the only thing that worked for me, is to get a personal mentor. Now, to get different personal mentors, it can be a little bit difficult. You have to offer them some sort of value in terms of finances or some sort of beneficial skill set that can help improve their lives. And in return, they obviously can teach you how to trade. In my cases, it was just money. I remember I paid a lot of money to people. I had to fly out to Miami, and I literally went broke trying to do that. However, I'm not saying you should do that. I'm not saying you should spend your last dime on education, but that's what I did. And in my opinion, that was the only time when my trading career actually started to change. Because number one, I got the right information, and number two, I had enough skin in the game to now take it really seriously. However, that's just coming from me. Now you've been learning a little bit more about what it actually requires to become a full-time trader. If you want to learn a lot more, I've got so many more videos on my YouTube channel. I've got over 150 on there completely for free for you to dive into and watch. So don't forget to drop a comment, like, and subscribe for more content. And I'm going to see you guys at the top, from the top, because you already know the bottom is way too crowded. Sheesh.